Michael Burry, New Market Collapse Prediction, The Dying of Money Book Summary. Dr. Michael J. Burry, the financial genius who profited hundreds of thousands of dollars betting on the crash of the U.S. housing market and helped to inspire the movie The Big Short, is currently warning that America is set to face a Weimar-like hyperinflation situation. Considering trillions more are about to be issued, the U.S. government is inviting inflation, confirmed Burry. Welcome back to Investor Secrets. In this video, we're going to analyze Burry's latest insights on the U.S. economic collapse and the looming stock market crash. So let's get right into it. Dr. Michael J. Burry, the hedge fund manager who made hundreds of millions of dollars betting the U.S. housing market would crash and helped inspire the best-selling book The Big Short, predicts Weimar-like hyperinflation in the U.S. Burry, who runs Scion Asset Management, tweeted over the weekend that he fears prices will go up, citing skyrocketing supply chain costs and U.S. retail sales, which increased 5.3% in January thanks to stimulus checks boosting the economy and trillions more planned. The U.S. government is inviting inflation, Burry tweeted. The U.S. government is inviting inflation with its MMT-tinged policies, brisk debt/GDP, M2 increases while retail sales, PMI Stage 5 recovery. Trillions more stimulus and reopening to boost demand as employee and supply chain costs skyrocket. Cassandra, at Michael J. Burry, February 20th, 2021. Burry linked to Dying of Money, a 2011 book by Jens O. Parson on the lessons of the Great German and U.S. inflations. The cover of the book depicts old German money, a Reichsbank note issued on August 22, 1923, for 100 million marks, worth about $20 on the day it was issued. 3 months later, it was worth just a few thousandth of a U.S. cent as the process of inflation played out. Burry also tweeted about the speedy rise in debt-to-GDP ratio and increases in the money supply measure, or M2, which includes cash, checking deposits, and easily convertible near money. From 1918 to 1933, Germany was referred to as the German Reich, or German Republic. The term Weimar Republic became more common in English usage in the 1930s and refers to the city of Weimar, where the Republic's Constituent Assembly first took place. Quoting extensively from Dying of Money, Lessons of the Great German and American Inflations, Burry mentioned how inflation has recurred throughout history, how it usually follows an economic boom and rise in new fortunes, and how it leads to higher crime, higher cost of living, and poverty. He compared Germany's road to hyperinflation in the 1920s to the current U.S. trajectory. The life of the inflation in its ripening stage was a paradox which had its own unmistakable characteristics, Burry tweeted. One was the great wealth, at least of those favored by the boom. Business and the stock market were booming. Side by side with the wealth were the pockets of poverty. Greater numbers of people remained on the outside of the easy money, looking in but not able to enter. The crime rate soared, demoralization crept over the common people, from watching their own precarious positions slip while others grew so conspicuously rich. Almost any kind of business could make money. The boom suspended the normal processes of natural selection. Speculation alone, while adding nothing to Germany's wealth, became one of its largest activities. Everyone from the elevator operator up was playing the market. Throughout these years, the structure was quietly building itself up for the blow, Burry continued. Germany's inflation cycle ran not for a year, but 9 years, representing 8 years of gestation and only 1 year of collapse. Burry quoted Wall Street Journal writer Charlie Grant saying, "When dollars might as well be falling from the sky, management teams get creative and ultimately take more risk. Paying out debt-financed dividends to investors or investing in risky growth opportunities has beaten a frugal mentality hands down." Prepare for inflation, Burry said in a now-deleted tweet on Thursday night. Reopening and stimulus on the way. Pre-COVID, it took $3 debt to create $1 GDP, and it's worse now. In an inflationary crisis, governments will move to squash competitors in the currency arena. Burry has been making waves, saying he doesn't see Bitcoin or gold as guaranteed havens for investors, Business Insider reported. He described Tesla's $1.5 billion bet on Bitcoin as a distraction from its troubles in China. The first foreign car maker to operate a wholly owned plant in China, Tesla has been called out by Chinese authorities, citing consumer complaints about quality issues. Burry also said Dogecoin's record price signals a massive bubble. Burry invested in the video game retailer GameStop in 2019 and is credited with helping lay the groundwork for its stock to skyrocket up to 2,500% in January. But in recent comments, Burry described the GameStop frenzy as unnatural, insane, and dangerous, and warned of a massive market bubble. Burry linked to a Wall Street Journal story in which Dogecoin creator Billy Marcus said its current price of 8 cents was as crazy as GameStop stock being worth $325 at one point in January, Business Insider reported. In another tweet, Burry suggested that he expects a market crash within months. Michael Burry expects the post-pandemic economic recovery and another round of stimulus to drive up prices, and doesn't see Bitcoin or gold as guaranteed havens for investors. Prepare for inflation, the investor said in a now-deleted tweet on Thursday night. Reopening and stimulus on the way. Pre-COVID, it took $3 debt to create $1 GDP, and it's worse now. In an inflationary crisis, governments will move to squash competitors in the currency arena. BTC Gold. Burry shot to fame after his billion-dollar bet against the U.S. housing market was chronicled in the book and the movie The Big Short. He also helped lay the groundwork for GameStop stock to skyrocket last month when he invested in the video game retailer back in 2019. The Scion Asset Management chief underscored the rising threat of inflation in a flurry of follow-up tweets. He quoted at length from Dying of Money, Lessons of the Great German and American Inflations, a book by Jens O. Parson, to drive his message home. Burry highlighted passages from the book about the recurrence of inflation throughout history, how it's usually preceded by an economic boom and a spike in overnight fortunes, and how it leads to soaring crime, surging living costs, and poverty. The investor compared Germany's path to hyperinflation in the 1920s to America's current trajectory. Germany, the US, started by not paying adequately for its war, on COVID and the GFC fallout, out of the sacrifices of its people, taxes, but covered its deficits with war loans, treasuries, and issues of new paper Reichsmarks, dollars. #doomed to repeat, Burry tweeted. History is not useless, he said in another tweet. This text explores the 1970s American inflation, which is more relevant today than one might think. Burry also drew parallels between the market mania in Germany before inflation took off and the Reddit-fueled buying of meme stocks this year that led Robinhood to temporarily halt purchases of certain stocks. Before the German hyperinflation in the 1920s, everyone from the elevator operator up was playing the market, and volumes became such that the financial industry could not keep up with the paperwork, and the bourse was obliged to close. Sound familiar? #Robinhood down, he tweeted. Burry's latest comments echo his warnings of a massive market bubble, and his description of the GameStop frenzy as unnatural, insane, and dangerous. If you guys enjoyed this video or think it was valuable, then don't forget to hit the thumbs up, subscribe to our channel, and hit the bell icon to get notified first. Also, feel free to let us know your thoughts about the next video in the comments section down below. See you soon. Bye.